The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. We have a special guest today. We have Norm Winsky from Astro Trend. He will be on at 9:30, and tomorrow we'll have Shane Smolian from wolftrader.net. So both of those will be very interesting guests. So we'll start with Norm today. We're going to start today like we usually do with the DAX index. But before we do this, I wanted to mention, we've been talking in the Tiger Den today about the music of the Beach Boys, the fact that that's what I like to play in the morning. It sort of picks you up. And it was interesting because Mike Love of the Beach Boys was on Bill O'Reilly of the O'Reilly Factor on one of those networks. I can't remember, CNN maybe. I don't remember which network it is. But he asked him, he said, how can you still be performing at the age of 75? And Mike Love said to him, have you ever been to one of our concerts? And Bill said, no, I haven't. And he said, well, it's like being 16 years old again. And he said, every time I get there and do it, he said, I still feel like I'm a kid. And he said, I do 172 concerts a year. He said, I do more. He said, but the travel schedule just doesn't make up for it. But if you've ever been to a Beach Boys concert and you like their music, you will go away stoked because when they start playing the music of the Cars, that's what's really cool. Little Deuce Coupe and 409 and Little Old Lady from Pasadena. Those are the ones that are really like. Of course, the Pet Sounds are great too. I happen to know several of the Beach Boys because of my association with my good friend Jay Crosby, who passed away 20 years ago. But we were at the Malibu Bay Club in 1987, and Mike Love was there, and we were the guest of the ambassador to Sweden. And she said to him, what do you do? And he said, well, I'm a Beach Boy. And she laughed, and she says, you're kind of old to do that kind of job, aren't you? And everybody at the table, there were about 7 of us there, we all cracked up. She didn't even know who he was. And it was rather funny anyway. Okay, let's get to the markets. Here's the DAX. As you can see here, we've been in a really tight trading range the last 3 days. We hit this 11,650 level, then we backed off about 120 points from there. We've gone sideways, a couple of small ABCD patterns. Long-term trend is still up, short-term trend is still down, and that's it. That's pretty much here. Someone's asked me a question, when did I migrate to Indiana from California? It was 1963. I'd been out of school for a year, and when I got out of school in Indiana, my last class was in January, and I walked past the building at the bank there, and they had one of the first digital thermometers, and it said minus 19. I immediately went to Eli Lilly to work, and they sent me to California to work as a clinical coordinator, and I was there for, I was there from 65 through 70, and then I was in Indianapolis from 70 and 71, and then from there I went back to California, and I didn't leave again until I came to Arizona here in 1994, and that's the end of the history lesson, boys and girls, okay? All right, anyway, let's take a look here at this DAX. As you can see, we're in this tight trading range. It can go either way from here. And as you know, we've got some pretty smart people like Bill Meridian and a few other guys that are out there looking at a potential top here in this market. Whether it's going to occur or not this year, we'll have to wait and see. But it's still early in the year, as you know. Well, we want to review some of the things that we went through yesterday. Okay, that's the main thing. First of all, let's take a quick look at this crude oil thing that we were looking at yesterday. If you remember, we were watching crude oil to come down to this level in the around the 73 level. We got down to within a heartbeat of that. And then we had a pretty good rally, and we're extending that rally today a little bit, telling us that this is an important bottom. So anything below $53 a barrel now would be construed as negative, in my opinion, because it held extremely well and has been able to rally a little bit from that level. Even though it's a small rally, it is still rallying, and that's still, very, very important. I think it's something that we ought to, keep our minds to and watch what's going on. The other one that looks interesting that we've been watching from a longer term standpoint, and this goes back over the last 3.5 weeks, of course, is this gold market. And as you can see, we've had a pretty good move in this gold. You see the price measured up here to this 1175 to the 1180 area, and we did hit 1180 last night as the market was increasing because of the movement in the euro versus the dollar, which is also another one that looks extremely interesting. So all of those particular ones that we're watching look very, very interesting. If we take a look at the combination here between the gold and the silver, I heard John Logan talk about on his show the relationship, and it's very interesting because silver is really lagging badly. This is an hourly chart, folks, going back over the past month or so, and as you can see, the gold has taken out the highs of early or mid-December, up around that 1157 level, whereas you can see silver has only been able to make a 61% retracement so far. We made that last night at 1675. That was pretty much spot on, but gold went up a little bit higher. It completed the 78% level of its contract. So those are the differences that, when you watch them, if you're long, you want to trade the one that is the strongest, and if you're short, you want to trade the one that is the weakest. That's the way that the old history books try to teach you, but sometimes the history books, they're meant to be rewritten. Now, if we take a look at where we are in gold right now, you'll be able to take a look and you'll see the correction that we're having so far this morning, which has been rather minor. There should be some pretty good support coming in at the old high that broke out at the 1168 level. That's also down about $12 from the high, so that's an interesting one. But remember, folks, that the harmonic numbers in gold are 34 and 17. You add 34 and 17 together, you get 51. And if you add 51 to the low that we made back on December the 15th, you come out, bing, 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 judge's ruling, 1180, and that was the high today. That was also a beautiful ABCD, and then you can also see it at the 1.27 level. Remember that the silver only made a 61% retracement of this whole move, whereas gold has made a 1.27. So that's the stronger of the move. So keep that in mind, that that has been the strongest. So if you want to short one, short the weakest. If you want to buy one, buy the strongest. So that's interesting to see how the differences between these things work out as we go through some of these. We're going to have Norm Winski on at the break here in about 16 minutes. We've got a short break coming here. I wanted to mention the stock of Amazon because John Logan also talked about that, and I'll put it up and we'll discuss it in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed With TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we're going to talk a little bit about platinum. Platinum's had a pretty good move off the bottom also. We've moved over $60 an ounce off of the 78% retracement that we hit about 2.5 weeks ago. This is still a bear market rally under any stretch of the imagination, but we need to keep an eye on it because it's something that could be very, very important, down the road a little bit. Those are the main things that when you're watching these is what you should be keeping an eye on, at least from the technical perspective, I would think. But both silver, gold, and platinum have certainly hit some type of a bottom, and they did it in the midst of the U.S. dollar rallying, which was, really something to behold. Because once the dollar did turn down, then it really made a big difference in this. So there was a big move in the gold. Now we're starting to see some movement in grains also. It's still a bit early, I believe. We had 18-cent move in soybeans. We had an 18-cent move in wheat, about a 10-cent move in corn. Even cotton, which I hardly ever trade, has had a big breakout to the upside. So there could be some influence of inflation on some of these things, and that's something that we should also follow as we go through. I wanted to go through just a little technical. Someone asked by email about that Australian dollar that we talked about yesterday. If you notice, this is what we were looking at as we were coming into the week. You'll see that little line where you go up to test the old lows that were around the 73.20 level, and that's they act like magnets, folks. Why they do it that way, I'm not really sure, but it really is amazing how quickly they can come up to those levels. Here you can see a little bit 2 days later what has happened, that the market came very, very close to that 73.20 level, which was almost spot on. And then last night, it hit it exactly. It hit the exact high, and that Australian dollar was 73.20, and we're testing it again now. So what that means is if the Australian dollar can get above the 73.20 level, that old resistance will now become support. So it's going to be very, very interesting that how this thing is going to be, acting. So don't rely too much on fundamentals because they change very, very quickly. Well, the technical patterns, even though they can change quickly, they can also be interpreted better because you're looking at the sum total of all the buyers and sellers that come together, and that's the real thing that I think is important to watch without putting too much emphasis on technical analysis, which I put all my emphasis on technical analysis because the fundamentals have a tendency to be a little bit slower, and that's one of the things that I wanted to keep in mind. Getting back to the bonds, we've had a pretty good run in the bonds here for the past several days. Let's just get here for a second here, and I wanted to bring up the German bund to show you. Oh dear, don't tell me I have one of those disappearing charts again. Doggone it. Yeah, I don't. Here I do. Oh, here's what I wanted to talk about. This is it, not the bonds. I wanted to show you a total failure. I want to show you this. Let's just get to this really quickly. This is Deutsche Bank, and as you know, here's one that you want to talk about fundamentals. As you remember, we got down here to $11.08 a share, which was a double 1.618 expansion number. And at that time, they were saying that Deutsche Bank was going under. Now, that was the epitome of negative fundamentals. Now, look what's happened. This stock has rallied 80%. It went from 11 to 19. And when we got to the 78% retracement, it set up as a beautiful shorting opportunity up there at the 1830 level. And then look what happens yesterday. It gaps up, and so you can't stand in front of this. You have to wait and see what the next pattern is going to be. There's a perfect example of why the fundamentals have to be the worst at the bottom and the best at the top. That's just the name of the game because the price follows the news follows the trend, and it always has. And so the technical thing is just showing you how many buyers and sellers are coming together, and that's what you're looking at. That's why when you see these 3 drive to a top patterns and 3 drive to a bottom patterns, you have to have really bad news or good news at that time. Otherwise, those patterns won't form, and they form many, many times at major highs. And those are the things that I think you've got to really hang your hat on. So keep in mind that it's just technical analysis, but it's pretty important. Now, John Logan was also talking about the utility index, and I wanted to bring up the long-term chart of the utility index because it is one of those that has a very, very bearish long-term picture. We went down, as you remember, we hit that 61% retracement. That was one of the reasons we were friendly to the bond market, even though the world was coming apart on it. And we've had a pretty good rally in that so far. But this is a major top here in the Dow Jones Utilities on the weekly basis, the double 1.618 expansions. We had a very good break down into the old high breakout, and now we're having the rally back a little bit. Now, should this go up and make new highs, which would be about a 10% move to the upside, this would negate this high, and that means that we could go even a whole lot higher. We'll have to wait and see how the market's going to, how it's going to work from this time. But we'll watch it very, very closely for sure. Anyway, the next one that someone's asked us about, hold on, give me a second to pull it up, and I will get it right here. Where are you? There it is. Oh, this was the IBB. Just give me 1 second here. And you'll notice here, we've had a little bit of a rally here. This is the chart from Monday. And we had a little bit of a rally right after the holiday here. In fact, it rallied up, but we tested those highs at around 279, 280. But as you can see, this is in a really strong downtrend. This is the strongest of all the indices. As you notice that when it made its high, you can see that it made an island reversal up there. There was also a 3 drive to a top pattern. And that was way back in July of last year. And the market went from, 400 down to 238. and we're still trading at around 280, given the fact that we had this monster 10% move in most of the indices, following the surprise of the election. Frankly, I can't believe how much news is focused on politics still, even after the election. It's just amazing how the networks are just hanging on to it like there's nothing else to talk about. But that's politics, boys and girls. That's politics. So we'll keep an eye on that, as we always do also. Okay, now the next one we want to talk about is the Canadian dollar versus the crude oil, because we still have a chance in the crude oil to break down. And let me show you why. If you take a look at the relationship here between the dollar index and the crude oil market and the Canadian dollar, you'll see that we are in an area where we could be topping. That means that crude oil could be heading to the downside. And we did have that false breakout, as you remember, on Tuesday. We went through that several times. There's no reason to go through it again. But keep your eyes on crude, because unless we get above $55 a barrel very, very quickly, we're most probably heading down towards the 49 level. So 877-927-6648. Stay tuned for Norm Winsky of Astro Trends.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Norm Winsky of Astro Trend on the line. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning to you, my friend. You are ready to go. We've got your first page up showing your planetary index forecast, which has been pretty good. So why don't you start and tell me when to turn the page?
I will do that.
Thank you.
Thought I would tell you that I have since it's January, everybody wants to know what's going to happen. So I thought I would go with somewhat of a theme here, look back at some things that happened in the past here and see if we can use what we've learned from that to forecast what's coming up. So
Good
we
idea.
have the planet. What's that again?
Good idea.
Yeah. So we had my planetary index chart here. The blue line was the forecast published back on November 28th, and then I overlaid the Dow Jones Industrial Average 10-minute bar chart on top of that. We had some planetary points here on the over the weekend of the 16th, early morning, I think, of the 19th. We have a red arrow on the chart showing that Mercury SR is stationary retrograde. Planets go due to the relative motion of the Earth here on Earth. When we look out of the sky, it appears, that's the key word, it appears that the planets stop their motion and turn to go either retrograde, that's backwards, or direct, that's forward. Mercury turned retrograde there, and that was a little short-term bottom there, coming down from like about a 3-day correction. And then we went up, and made the high of the day, high of the month, when Mercury got to 0 north latitude. And then over here on the, that was on the 20th, 21st. And then over here on the night of the 28th, we had Uranus turning direct, and that was about a day off of that late December high when we had the year-end correction. So, and overall, the forecast, I think, was pretty good, as you indicated. Now, here's the key. You talk about this, I think you were talking about this on yesterday's show, that the classic rules of astrology kind of been upside down for the markets lately. You have to recognize that's what's happening. You have to be flexible. And it's like, Larry, you might remember the old game show on TV, Name That Tune. They give you a few notes. If you recognize the notes, you know the whole tune. Well, if the market is tracking the forecast upside down, then all you do is flip the forecast upside down, and then hopefully it works well. Okay, we're going to the next chart now.
Yes, sir.
Now, there's been a lot of, I've heard some talk the last few days about the so-called January barometer. As January goes, so goes the year, is the old Wall Street adage. I've also heard sort of negative talk. Oh, this doesn't work, yada, 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 and so forth. And yeah, if you look at this thing and you don't have much imagination or whatever, and not used to doing things, sort of in a out of the box way. I like to joke that in a past life I was Australian, so I flipped things upside down. So here, well, we'll get to that in a minute. Here's the blue bars, or what happened in January 2016. Okay, you see that, and I stretch them out for the year. Okay, and here's the black bars. That's what actually happened. That's the Dow Jones daily bar chart. Okay, now let's go. That looks terrible, but in doing this, bad is good, because all we're looking for, Larry, is a strong correlation. We don't care whether it's positive or negative, because there's a negative correlation. You just flip it upside down. Let's go take a look how that worked out. So here you go. Here's your inverted January barometer, and there you go. I think that worked out pretty well for about 11 out of 12 months. You see that?
Sure did. Looks good.
Yeah. There you go. So that we can learn from that. So don't, I heard a guy on CNBC yesterday just totally dismissing this. I've seen statistical studies saying that since about 1950, this has worked about 75% of the time. And just imagine for the years it didn't work, if some of those years it was tracking the inverted track. So, okay. So I like that a lot. Here's another thing I often look at in the beginning of a year. The old stock market descending up pattern. I think some of your other guests have been talking about that recently. Now, here's the thing. So this worked for almost 100 years. One of the biggest, most dramatic years of each decade for 100 years was the 50 year of the decade. 1965, 1975, 1985, so forth. Those were always the strongest year of the decade. There's a pattern. For those who are not familiar with this, somebody laid out the stock market data and stacked them on top by decade and noticed that there was a pattern, and that the 50 year usually was a strong up year. This worked for almost there's also a pattern to the other years too. The seventh year was usually a down year, and so forth. And the eighth year would be the second strongest year of the decade. So there's a very strong pattern to this. Just for example, the fifth year worked for almost 100 years. We never had a down year for a 5-year until we got to 2005, when we had, I think Dow Jones closed down a fraction for the year. Okay, then I started wondering, well, gee, why didn't it work that year? And so then I started thinking about, you know what, and I noticed that the earlier years too didn't quite follow the regular decennial pattern like they should have. And so I started wondering, perhaps, based on some of the things that Gann had said about numerology, that we changed the digits at the front of the year when we changed the millennium. So we went from a 19 to a 20. Perhaps everything's 1 year later. So I started following that method, and that worked out well, because if you remember back in the decade, that the market actually had the strong year was the big strong culmination year. Well, not the culmination year, but the year that was probably the strongest was 2006. And then we had back in the old model there, the sixth year of the decade was typically your distribution topping year, and that followed the pattern we had in 07. And then the old model said the 7th year was a big down, and in that old decade there we had big down in 08. And then the old model, the 8th year you'd bottom out in the spring, and that's what happened in 09. So everything is a year later now, I think, under the decennial pattern. And so let's extrapolate out to current times. So 2016 would be like the old 5-year, and so therefore we should get a strong up year, and we got a strong up year. That means that 2017 should be like the old 6 pattern, and then we should be in a topping distribution type year this year. And then 18 would be a strong down year. Okay.
Okay, that makes pretty good sense.
Thank you. And so now let's look at something else that's worked in the past. I know you've talked about this a lot. Every time I come on here, I talk about it. This is, I joke that this is for people who don't want to think too much, or don't have a, don't have a rocket science kind of brain. If you're want to do things simple, you don't want to work too hard. The lunar cycle. Last night I went on Google, I punched in lunar, and I got this, what's on the page here now. It tells you when the full moon and new moon are. It was free. I copied and pasted it into my notes here. Okay? And this is forever. You could do 2025. Pick a month in 2025 if you wanted, or you can go back and check it out. All right, here's a corn chart. This works, it's in the grains and the precious metals love the lunar cycle, so here we go. Let's go back. It says no.
We got to pay a few bills. Norm, we got to pay a few bills. Stay with us, my friend.
Yes, sir.
Norm Winsky from Astro Trend. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks. We're with Norm Winski of Astro Trend. Fire away, Norm. You still got the mic?
I got your ears, right?
Yep.
That's a corn joke, Larry. Okay.
Oh boy, from the old Indiana days, huh?
There you go. Who's your ball? Who's your ball? Who's your paw? Right. Well, go ahead.
Yeah. Who teaches you those things? Do you pick them up yourself, or do you belong to a commodity club?
No, the corn got in Indiana. You know.
Oh, okay. Fire away, my friend. We're on the January 2017 key dates.
Yeah, this chart I just took out of my letter, which I sent out on Monday, my monthly letter on Monday. So the data isn't up to today, but it's just a few days old. This is the daily chart for the corn. Okay, the Google told us that the new moon was on the wheat 7 a.m. on the 29th. Let's go look at that. So here's this faint line. Here's December. So here's the 30th, the next bar over. Here's the 29th. Oh, look at that. There's the 28th. There's your 29th. You were right near top there, and the market dropped about 15 cents in about 3 days. And so I think you could have made some money there. All right, then the market rallies up, and the high of the month in December was right there, December 13th. There you go, high of the month. That's so I think you could have made some money selling there. Pretty simple, right?
Yeah, well, this was covered in Andrew Lowe's book, The Evolution of Technical Analysis. He said that the Sumerians and Babylonians had clay tablets that had markings of the moon and wheat and corn for planting, so I guess they were using something like this back before they had automatic trading, I guess, huh?
Yes, sir. Just all the grains bottomed back here in late August, early September when we had a solar eclipse. So everything bottomed, turned within 1 day of the solar eclipse back there. Mm-hmm. So that's it. That's pretty simple. So anyway, moving ahead there now, we have here my top key dates for the month of January. Looking ahead, these also most of these apply to the grains, and most of them apply to corn, and they all of them apply to the stock market. So here's your January top key dates. Not all the key dates, but the ones that I think are the most important are this weekend. We have Mercury. We talked about Mercury turning retrograde there back in December. It will now do the opposite. It does this about three times a year. Mercury over the weekend coming up will turn direct. And then we have on the 11th, we have a full moon and also have a mathematical harmonic point landing on that day. And then on the 17th, we have Venus at 0 north latitude. That I think that's going to be a very important point. And then the 19th, we have the sun changing signs. And then the 27th looks big with a new moon. Oh, and Mercury also getting a 0 south latitude. And then at the very end of the month, my January is going to run all the way through the first few days of February into the Super Bowl Sunday, and then you'll have Jupiter turning retrograde.
Norm, we have
Here's
a
your-
question from one of our listeners about the Venus at 0 north latitude. Do you want to explain to folks geophysically what that means?
Okay, here's the deal. That's the planet. Think of a carousel, and as the planets go around and around, the horses go up and down, and that's what the planets do. And most people don't realize that the space is three-dimensional, and the planets just don't go in like a flat space. They go, as they go around and around, they're kind of bobbing up and down. And so when they get to the midpoint there, that's when they would be kind of even with the sun's equator. They're at 0, and if they're going north and they hit 0 point, that's north latitude. And if they're going south and they hit that point, then they're at 0 south. This tends to be a sensitive point, and it tends to be important highs and lows.
Okay.
Okay.
That's the question that they wanted to ask, so thank you for answering it.
Yeah, and my little carousel model, I think it works well for that.
Mm-hmm.
All right, here's your technical picture here with the S&P 15-minute bar chart. You can see here it's not the clearest picture ever. Maybe you can decipher it better than I, but we're retesting the highs, obviously. What I'd like to see, not a forecast, it's what I think would line up more my forecast ducks, get more of your ducks in line, so you have a nice clear setup. I'd like to see us pull back into the weekend in the Mercury Direct. Then I think if that were to occur, then I think we have a chance for the rally into about the 17th of the month. And if that happens, then I think we could roll over and then that might be the high, And then we could go down. But that's just That's just the ideal scenario, not necessarily a forecast. I take it one step at a time. Also, speaking of one step at a time, if the folks later, I'll be telling you how you can get my free letter and free class. If they do the free class, they get a free trial subscription to my nightly updates too. Go ahead, Larry.
Okay. I was going to say, so you'd think that we might have one down day sometime in 2017?
Oh, yeah. You're just pulling my leg now, right, Larry?
Well, just a little bit, but it's been pretty bullish out there, that's for sure. Now, someone's asked a question. Do you follow sectors at all in your work, Norm,
well,
like the banking sectors, financials?
You can use astrology for the sectors, but I recommend just keep it simple and fewer variables, trading futures, trading commodities. But yeah, you could have a astrological indication for I don't know, the corn or not corn.
The banking index and that
kind of thing. If you had Taurus, the bull, as a money sign, and if you had that indicated, then it might affect the financial area, that kind of thing.
Mm-hmm.
But it's better just to trade the futures, keep it real simple. You have a lot fewer variables. You don't have to worry about, some company, the CEO loses the key to the executive washroom, and that could affect earnings and all that nonsense,
Mm-hmm.
All right, moving on ahead here now. Unless you have any more questions, I'll tell the folks how they can get my free letter and a free class. It's an individualized class. By the way, if the new folks don't know me, I've been doing this for quite a while now, almost as long as Larry. And right out of school, I went to Chicago and became a member in 1975 of the Chicago Board Options Exchange, and also in a few years later bought a seat on the Board of Trade. And so I've been doing this a while. I've been studying the astrology and the markets. I actually started studying the market when I was 15 years old. Now I'm 65, so that's 50 years. And then I was trading in college, and that's how I made the money to buy a seat when I got out of school in 1975.
You also own, you bought a lot of the books from Evangeline Adams' astrological library too, didn't you, Norm?
Yes, sir. I own her library. And she was the astrologer. She was the astrologer to J.P. Morgan.
Yep, that's right. And he said that millionaires don't use astrologers; billionaires do.
That's what he said. That's supposedly what he said. Yes, sir. Anyway, so the folks might want to get a hold of me here. There's a narrow window when I can do this. I have like a window here right now for the next several days when I can schedule people to do it's about a 4-hour class. And it's individualized to their skill level, and they can learn And this stuff looks complicated, but as I showed you, like the lunar cycle, it's really very simple. Once you get over the jargon and some new terms, I could teach a grade school kid to do this, So it's really very simple.
Mm-hmm.
If you have a 5th grade education, you could do this, And so There you go. So get a hold of me. I have a monthly letter. The January letter is now available. Here's my contact info. I'm in Florida at 239-594-3939. I guess we'll do it when we come back, right? Am I coming back?
Yeah, we're going to come back. Stay with us. We want to give you as much commercial time as possible, my friend, because this is the new year.
Thank you.
Thanks, Norm.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Norm Winsky from Astro Trend out of Naples, Florida. Norm, you're telling the folks about your free class and how to reach you. Why don't you, I've got it posted in the room there, but for the folks that are, in their cars and stuff, why don't you give them the phone number again? And
okay,
also,
let me just do a quick overview here. My letter covers the stock market, T-bonds, all your currencies, and most of your major commodities, okay? You can get a hold of me if you're in your car, 239-594-3939. That's 239-594-3939. That's my number here in Florida. Or if you're overseas, or either way, you can Skype me at norm, NORM.WINSKI. And here's the exciting thing coming up here later in the month. which I can't tell you now, Larry, because I don't know the answer yet. But I'm doing on research that shows that the stock market price behavior can forecast who's going to win the Super Bowl. I'll know that at the end of January. So the people that get my class and my letter, I'll be sending out the nightly update and giving you my forecast for who's going to win the Super Bowl.
Will you cover the point spread?
No, I don't. I'll send them to you for that. Okay.
Go ahead.
Oh, my email address. People might want to email me. That's Nwinski, Nwinski at Embark, EMBARQMAIL.com. Okay.
That sounds good.
You get
All
the
right, my
website
friend.
off of my. I do have a web page with my contact info, but it's the email that's on there. It's not as good as this one.
We have one other question, and is what kind of materials do you get with your Astro Cycles course?
It's about a 4 or 5 hour class. You get the letter for free, and then we go through the letter, and I show you the different forecasting methods I have in there. In addition to Astro, I teach you how to do market fractals, for fractal forecasting. I teach you advanced Fibonacci. I think you get probably the roughly the equivalent of a college semester or 2 semesters of college for traders. I mean, it's really great.
Yeah. Hey, thanks for joining us, my friend, and Shana Tova. We'll see you soon, okay?
All right. Thank you very much, Larry, and looking forward to helping some of your listeners.
All right. Thank you, my friend. Norm
Happy
Winsky of Astro Trend. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.